The Netflix stock is being beaten up by bad market conditions, reaching a price of $262 on 7th November's pre-market. So is this a good time to buy the stock? Stay focused as we go through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stox 101 for regular stock market updates. First up, the ad-supported tier was finally launched on 3rd November and users can opt in by paying $7 a month. The problem is that advertisers are tightening their budgets as inflation hits them, and an example is Roku. Roku CEO Anthony Wood said that big advertisers are pulling back and refraining from advertising. Netflix might get hit by this as well, and investors fear that it might suffer the same way as Roku from this ad scarcity. The good part is that the company stands above competition in terms of revenue and profitability along with a low bankruptcy rate. In our opinion, the company is paving its future well and it can bounce back, but right now is probably not the best time for it. With all that in mind, let's analyze the charts. So as you guys can see right here, we're now in the 1-day chart for Netflix, and as always, we'll first analyze the 1-day chart, then the 1-hour chart, and to end it off, we'll get into the 5-minute chart. But right off the bat, we can see that ever since we got the earnings report, the stock, of course, went up by over 10% with a gap up in a single day, of course. And after that, we can see that we did hit a top, a pretty much a double bottom around $305.8, after which the stock fell back to the same levels where it was trading before. And of course, we did not get we did not get the pre-market data because the market is live now. I'm sorry for that. I'm kind of spaced out today. We can see that we're currently trading at a price of $256. We did get a slight gap up, I believe. And after that, of course, we've fallen down. If we look at the previous price action, we can see that we've been holding the support around $214, $215 for a long time, right? Ever since July. And we've been holding a resistance as well, or rather this resistance of $250 has been holding the stock. It was jumped up by the earnings report surprise, of course. And if you don't know about the earnings report, we did get a 45% surprise on the earnings. And what do I believe will happen to the stock now? Well, in my opinion, it should probably come back around this area, get supported at 250 and probably go up a bit, right? It will indeed break 250 and get back into its old range because, you can't really beat the market. Of course, great earnings is, good and all, but bad market sentiment, it's probably just the biggest thing that concerns a stock. If the market is falling, your favorite stock will fall as well, no matter the earnings or whatever, right? So, of course, if this stock does get good earnings, it is a big stock, a big company, so the rest of the market would probably get influenced by that. But right now, of course, we can see that it's not the scenario. Now, a negative thing that has caught my attention is first we got a pin bar candle over here, followed by a red pin bar. Well, not exactly a pin bar, but a red candle, which told us that it was a confirmed bearish pattern. After that, we can see that we did get another red pin bar, followed by another red candle. So does this mean that the stock is going down? Well, if you ask me, the pin bar candles usually work well like 80 out of 100 times, if I'm not wrong with the statistics. So of course you can see that if we get another red candle over here, we should be able to break the $250 resistance, or even if we don't break it, we should be able to reach it in another 2 days, probably get a pullback back into this range around 265, 260, right? Probably get resisted around 265. And let me erase these drawings real quick. You can mark on these levels on your own charts so you don't lose them, because I'm going to erase them. And of course, if we get resisted around 265, we'll probably come down crashing around 250, break the support, because of course we're going to break the support one day or the another. And then we might probably just continue this trend. Of course, it was a sideways market, right? It was looking up to the earnings report. If we look at the previous earnings as well, it was positive. And Netflix, if you ask me, is not really getting affected by this entire bullish sentiment in the market, because we can see that ever since we fell down to these lows of 170, right, we've constantly held on to the $200 zone. And this zone has played out really well for Netflix as well. We did try to get into the $300 zone, of course, and we did enter it. We did breach it, but we failed after that. So, of course, you can see that right now, if we look over here, right? If we were to continue the trend, it would probably just keep advancing in terms of volatility, but I don't see that happening now that we've gotten the earnings report. So, in my opinion, it should probably get deflated a bit. And of course, the stock now has better fundamentals, better profits, better revenue. So, it should be a buy in some time. Is this the best time to buy? Not exactly, right? If you ask me, not exactly. The market still has a long way to go, and that is well on the downside, sadly. So, the stock, I believe, should probably come back down around the $220 range, and this would be the best time to buy. Of course, these times were great as well. This was, well, the best opportunity ever, right? People who bought here already made almost a 2x profit selling over here on the peak. And well, if you think you can't really sell on the peak, you can. It's just better for people who trade positional than the people who trade, intraday. So coming back to the analysis, we can see that over here we're already getting a bigger red candle and it's getting stronger and stronger and stronger. So the next support we have is around $255. And if we're able to successfully break that, we'll probably get down to $253 this day itself. And of course, if we're not able to break this, we'll probably get a pullback, a small pullback. The next day, it will depend on the news part. And if we get a gap down, we'll probably be around the $250 range itself. With that being said, I am bearish on the stock short term because, of course, this is a massive bearish sign. Two pin bar candles in such a short period is a massive sell, right? But of course, in the long term, Netflix is a good company, and as we already discussed in the first part of this video, that the company definitely has better metrics, better numbers than its competitors. But with that being said, I don't believe there's much left to analyze in the 1 day chart. So let's jump on into the 1 hour chart. So now that we're in the 1 hour chart for Netflix, we have some more bearish signs to look at. So of course, the first one is right here. This really got my attention. The second number performance, or rather the second November performance, I'm sorry for that, we got an engulfing candle, which was pretty massive, and it was in the red, of course. It was, of course, followed by a reversal scenario as well as a pin bar on the negative side. Well, two pin bars on the negative side, indicating huge selling pressure, but these were on 3rd November. Ignore the dates. Let's quickly look at the price action. After that, we can see that we did get squeezed into this range around 275. Of course, we got resisted strongly. We did get a pullback after hitting 262.5. And currently, we can see that, of course, we did go down. We did get a pin bar over here, which kind of failed because it got a pin bar on the downside in the next candle, right? The follow-up candle. So currently, if you ask me, we're probably getting supported somewhere around, wait, let me erase these. We're probably getting supported around 255. And as I already told you, if we break that, well, it's straight up heading for $253. Is that going to be a volatile day? It's Monday, so of course it will be volatile, right? Thursday, Monday, and Saturday are usually the volatile days. And after this day ends, well, we'll see what happens on Tuesday, but if you ask me, as I already told you, if I were to reiterate on that, I believe that if we're able to break the $255 range, we'll probably get into $253 range, and from 253, we'll probably get a pullback at 255, and then we're range bound again in that specific area. With that, I don't think there's much left to analyze the 1 hour chart either, so let's get into the real deal, which is the 5-minute chart. And be excited because this is my personal favorite chart. So now that we're in the 5-minute chart, we have a much clearer picture of what exactly is happening. Now, right off the bat, we'll first look at the 7th November charts, and then we'll review the previous charts. But of course, over here, we can see that we got a pin bar candle on the downside, followed by a big red candle. This is really bad. This is a bad sign. And if we look at the previous chart as well, we did end the day off with a reversal that had wicks on the on the upper side that were pointed, of course, towards the downside, and a pin bar on the upper side. So this, of course, indicated a gap up, yet a fall. So over here, of course, we can see that we did get a cool-off period in the market ending times, and we have broken the $255 range successfully. As you guys can see, we broke 255, reaching a price of 254.7 pretty much. We got kind of supported over there, and we're trying to break that again. Well, as I already told you, 253 it is. If we reach 253, of course, we might just get to 250 today itself because it's a volatile day, as I already told you. But the overall market as well, we can see that Neo is losing, we can see that Google is gaining, we can see that, Apple is losing as well. We can see that Baba, ChargePoint, all of these stocks are losing. So of course, well, there you go, $253. We're already there. Is 252.5 the next range? Is 250 the next range? Well, we'll have to wait and watch. But until then, let's quickly analyze the previous action. Of course, we can see that we did get a pretty strong bearish trend over here, right? We kind of got squeezed into this range over here, where, this price action indicated that some massive volatility is bound to come by because of course it was Friday and Fridays are usually trend driven, right? And I just realized that I said that you can see volatility on Mondays, Thursdays and Saturdays, so I'm really sorry for that dumb thing because of course Saturday's markets are closed. And yeah, I did kind of space out on that one. Over here again, we can see that we're bound in the $253 range now, and we probably won't be able to cross the $255 resistance anymore. So we're probably headed for 252.5. Let's see. And of course, if we break that 250, it is. If we break 250 as well, well, then I don't really know what to say because I personally don't think that's happening, right? In my opinion, $250 is the max we can get, and then we'll get supported for sure. Of course, remember that this definitely was not financial advice in any way, shape, or form, and you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stocks 101 for more such videos, and as always, I will see you guys in the next one.